This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. We are coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, Prashant. Morning. Nigel, morning. So we started the show and Prashant's asking me, are there any festivals?
Prashant, there is good news. Next week we have a longer weekend.
Monday is a holiday, right?
Monday's a holiday.
Guru Nanak Jayanti.
Guru Nanak Jayanti.
So,
I did not know that. Thank
Yes,
you.
it's a long weekend.
Suddenly Sonia's day bright.
Suddenly my day
come,
is bright.
come
Yeah.
from a part Punjabi home, so I know this very close.
But yeah, I mean, it's been good tidings for, the market as well, festival or no festival, right?
Absolutely. And I think, end of the year, the mood has been end of the year like, right? I mean, seasonally, it's a strong part of the year, something we've discussed over and over again. And I think that continues. Let me just quickly begin by telling you what you need to know as we start another session. So Qs are day-on-day Qs, which is basically what happened last night, are softish. I mean, it's not exactly a roaring handoff from Wall Street. Nasdaq was down about 0.6%. S&P was down about 0.25%. I think, you basically had a 5-day winning streak on both these indices, and that was broken last night. So nothing to really worry about. Was there one big thing which caused the markets to dip? Not really. So I'll just start with some data. You had, and this is surprising, U.S. existing home sales fell in the month of October. The expectation was that there'd be a rise. Actually, the month of September also we saw a small fall, 2.5% fall. So there was a bit of a bounce expected, but actually sales fell by about 4.5% or so. So, rate probably at the margin, rate hikes are impacting, home sales. And of course, affordability and availability of inventory, etc., has also been an issue. You also had FOMC minutes which came out, which kind of made it sound like hikes are over for this particular cycle. This big global hiking cycle, it is behind us. Again, something we've kind of said over again from the last FOMC meeting. The minutes actually were from that particular meeting, which reinforced this once again. Now, of course, if you read the minutes, it looked like they all kind of think, the Fed members who decide on this feel that we need to hold rates for higher for longer. But the market is also starting to price in rate cuts in 2024. Now, in reaction to all of this, U.S. yields were flat. That's what I'm saying. It was kind of neither here nor there kind of a day. 2 basis point change in the U.S. 10-year. Oil was largely unchanged. It's been more down than up, $82.5 on Sunday. There is an OPEC meeting, and that perhaps will be closely watched and will be important. But for now, oil is at about 82.5. So these are global cues. Not a great handoff, but nothing really big time worrying as well. Now, just to circle back to levels here, the Nifty, by the way, has been ranged. Yesterday, we saw a strong rally, 100 points or so, but it's been ranged for a while. Now, you just have to see the daily candles for the last 5 or 6 days. The resistance, that big retracement that we're talking about from the all-time highs to the recent low, we are past all those levels. The last one was the 61.8%, the golden retracement. We are now trading above it. We are at almost 19,800. The resistance now is about between 19,850, very near-term resistance, 19,850 to 19,875, which is nothing but basically the upper end of this range that I'm talking about. And above that, I think the road clears up for all-time highs. Support comes in around the 19,685 levels. This is the 40-hour exponential moving average, which at the very least in the very near term should be used as a bit of a support if you're trading. Now, for the Nifty Bank, that's the index which has clearly been struggling. There, forget about the 50 or the 61.8% retracement. We are still around the 38% retracement of the full fall from the high to the low. And, what you need to watch is the low that we made recently, 2 or 3 days back, which is 43,450. And if that breaks, I think that opens up a fresh leg down. I'm starting with the downside level for the Bank Nifty, because that is clearly the weaker of the two indices. And it's been divergent, right? So now that's the level to watch, 43,450, a hold to that level. Perhaps, we live to fight another day. A conclusive break below that, we kind of open up more downside levels. Resistance for the Nifty Bank comes in. There is a significant gap area where the market kind of broke down from, which is again 3 or 4 days back. That range is 43,872 and 44,064. This is the resistance level which the Nifty Bank will need to take out. And of course, above that, you will have all kinds of retracement levels which we will put out, which we have been putting out, but of course to no avail because the Nifty Bank has been more weaker as compared to the Nifty. Just want to leave you with this one bit, and we'll discuss this quite extensively over the next 45 minutes till the market open. The first Tata Group issue in nearly 2 decades opens today. That is Tata Technologies. It's a ER&D company. We've got a few others listed in the space. One from the Tata stable, Tata Elxsi. The other, of course, has been KPIT, which has done phenomenally well. So a lot of action in the IPO market. And this is the big one that we will have our eyes on over the next couple of days. Sonia.
Oh, absolutely. And there was IRDA, which opened yesterday as well. That one, too, got a lot of traction, in the first day itself. So we'll talk more about that. But, the bulls are definitely in charge of this market. There's no two ways about that. If you map what's happened in the last 1 month, right, from the lows that we saw in October, the market is up almost 1,000 points. Look at that. The lows we hit was 18,857, and now we're almost at 19,800. Now, yesterday as well, the domestic institutional investors bought larger than what we've seen in the preceding few days. So DI has bought over 721 crores. So the money is coming in from there. And the US Fed minutes, the market has, I think, moved on. The Fed minutes have shown that there's no indication of rate cuts for sure. But the market has moved on. Yes, there was a slight bit of pressure in the US markets, but nothing alarming. As Prashant was pointing out today, the focus will be on the Tata Tech IPO. Now, remember, there is a lot going in favor for Tata Technologies. The company is debt-free. The fundamentals are very strong. It's in this growing ER&D space. The only worry that the street has is that there is concentration risk. So 40% of their business comes from Tata Motors as well as JLR. And that's perhaps the reason why the valuations are also reasonable compared to peers. So if you look at it, at the upper end of the price band, Tata Tech is trading at 32, 33 times FY23 PE compared to, say, KPIT Tech, which is in the same space, trading at 80 times. So there is that valuation headroom definitely. And it's also an OFS, so just keep that in mind as well. So this is, of course, something that the street will be focused on. A lot of the mid-cap tech companies in this space will be on our radar as well. Not just KPIT Tech, but L&T Tech, Tata Elxsi, all in focus today as the IPO opens. It's the first one from the Tata Group stable in the last 20 years, so there'll be a lot of talk about this. And the other one, of course, Nigel will talk more about that, but Coal India will definitely be on our radar. The company is guided for a 9% volume growth in FY25, so, the stock perhaps could see a little bit of action today, but more on that later. For now, at least, it looks like it's going to be a decent start, and the bulls just tightening their grip bit by bit in the market.
Well, that's right, Sona. Yesterday we did well, right? The Nifty ended higher in yesterday's trading session. The few factors that played out were institutions as the DI buying is outweighing the FI selling, and they bought close to around 260 crores yesterday. So that's point number one. The second factor is the FIs, they covered some shorts and they added long positions. So the swing factor out there between the long and short positions is close to around 5,000 contracts. And now you still have the short positioning at around 79%. What are they covering? It appeared yesterday there was some short covering on the Nifty Bank because the Nifty Bank actually ended higher with a gain of close to around 100 points. The Nifty Bank ended higher and you had the open interest that was down close to around 9% or thereabouts. Roughly around 2 lakh shares were shed out there. Now, in yesterday's trading session, you look at the IT index, well, that came off the high point of the day, and that's actually been a bit of an outperformer. So that was down close to 0.2%, while the Nifty Bank was higher. From a bullish perspective, you want both of them, to move in the same direction. Only then maybe we can head to around the 20,000 odd mark, because if you observe what's happened for this month as well, the IT index has done very, very well. But the Nifty Bank actually has been a bit of an underperformer. Nifty Bank is as flat as can be. In fact, the IT index, if you look at it just for this month, well, this is a 1 month chart, but if you look at it for November, it's up close to around 5% approximately. So you want both those two indices to move in the same direction. That's what will give the Nifty direction as well. Well, pulling up the options data then, let's pull up two strikes. 19,800 call, that's the highest open interest on the call side. And on the put side, you have the 19,700 put that has the highest open interest. And that should be the goalpost for this expiry that plays out tomorrow. That's the Thursday weekly expiry. So you just plug in the numbers going by these strikes. The recent high, that's 19,875. We saw this last week. That's a resistance node. The bears believe they can defend this. The bulls want to go ahead and conquer that. Going by the options data, 19,650. That's the crucial level on the downside. And the Nifty Bank, it's managed to defend the 20 and the 200 EMA on the downside. Now you'll want it to trend to around that 44,000 odd mark. If that's the case, maybe we'll see a bigger short covering bounce that plays out. So the bias is on the long side, on the uptrend, but you have the Nifty that has resistance at around 19,875 odd.
Okay, so those are some crucial levels to watch out for. But let's kickstart the show very quickly because it looks like it's going to be a good day for the markets. On the equities front, we have Vikas Jain of CLSA who says that during this reporting season, the CLSA analysts increased their FY24-25 earnings estimates for a slightly higher proportion of stocks than they decreased. He says CLSA analysts upgraded recommendations for 11 stocks versus a downgrade for only 8 stocks, and the consensus raised their FY24 Nifty EPS estimates by 1.5%, driven by oil and gas, auto and healthcare, while banks, IT, metals and FMCG saw earnings cuts.
Okay, we'll got more. Mahesh Nandurkar of Jefferies presents 27 top buys and 5 top underperform bottom-up ideas from their India analyst team. He says their top buys are ICICI Bank, Axis Bank, IndusInd, ICICI Pru Life, Bajaj Finance, Chola, Shriram Finance, Eicher, TVS Motor, Tata Motors, Coal India, L&T, Thermax, NTPC, JSW Energy and Godrej Properties. There's also Bharti, Honasa Consumer, GCPL, Zomato, Sun Pharma, Piramal, Max Healthcare, Ultratech, Kajaria, and so forth. That's a mouthful, long list. He says the top underperform ideas include Mahindra, Cummins, Asian Paints, Gujarat Gas and Tata Power. Shorter list on the underperforming side. And of course, nearly 30 names on the outperforming side. So,
I thought the entire show is going to be over and then you're still going to be talking about,
should I stop, not stop? So, well, let me just
Jefferies
continue.
picks. All right, more on that later. But on the bonds, Neeraj Gambhir of Axis Bank says a decline in US Treasury yields due to softer than expected inflation data led to a fall in domestic yields. Moreover, better than expected cutoff at the auction led to further rally, and the Indian 10-year benchmark touched a low of 7.19% during the week. Profit booking in GSEC and strong paying in overnight index swaps, or the OIS, took the yield to 7.27%. He expects the 10-year benchmark to trade at 7.2 to 7.3% range for the week.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit for now in our special Top 10 segment. For the time being, we run you through the list. We're looking at Coal India, IndiGlobe Aviation, GMR Power and Urban Infra, NHPC, Signature Global, Ganesha Ecosphere. All of them will be reacting to positive news flow, while on the flip side, TCS, Texmaco Rail, All Cargo and IDBI Bank could be a little under pressure.